Hi, it's Jennifer. Thanks for coming back. This is part 2 of the HopperDirectX introduction video series. In part 1, we talked about the MACD. We talked a little bit of a review about what a hopper is and how I came up with the HopperDirectX indicator. But today I want to talk to you about some short-term uses and some long-term uses. This is still the introduction series, and in the next series we will be talking more about strategy and how to actually strategize with this tool for your actual trading. So a quick look at what we're going to talk about for short-term uses. Point of entry for trend activity, identification of market direction, identification of blocking one side or the other, and that's going to have some meaning, and the warning for the range behavior being censored or being sensed is another useful thing that this indicator can do for us. Let me just show you a couple of examples of what I'm talking about. So point of entry for trend activity. This is a 15-minute time frame chart, and as it pinpoints direction, you can take that information and use that information however you choose to trade during your trading day, but it really pinpoints the point of entry for the trend activity, and here's the X where that ended, and then it actually started up again immediately. And then it will give you an X when it thinks that wave of momentum is done. And in this instance, we had a pretty strong trending market, and it immediately popped up another label identifying and pinpointing the beginning of trend activity. And so this is just to show you the indicators at the bottom. The one on the bottom is the HopperDirectX. The one on top is just a standard MACD. And the standard MACD is waving up and down over zero multiple times and producing lots of different signals that can also be very helpful in trading. But the HopperDirectX is directing you to trend activity. It's literally trying to identify and hold on to those trend patterns as long as possible. And so when both of the lines cross up over zero, just like a hopper, it identifies that actually in this instance, the minute it hopped into the buy position, it was still sensing trend or range activity from the previous market. And then when it cleared the range pattern area, it went ahead and popped up our indicator that we've found, and a signal for the up direction and for timing and expectation of trend behavior. And so if it does detect range, if the range filter gets in the way, it will block that signal. And then if it clears the range filter in the appropriate amount of time, it will go ahead and pop up that point of entry for your trend activity to begin. And so this happened on a 15-minute chart on New Zealand dollar, but you can see that it carried on for days, and then it finally gives it up here, but it's right back on it if the as soon as the trend resumed, and there was no range filter to get in the way to block that, so it was an immediate confirmation that it's still on. And it really pinpoints timing for those points of entry for the trend activity. In this example, trend activity lasted for days. It doesn't always last for days, but the point is you don't know when it will or when it won't, and it really gives you a clear picture of when it started, and it gives you an X of when it's over. This is another thing I wanted to talk about for identification of market direction. Same chart. But just like any other MACD, above zero, market direction is up. Below zero, market direction is down. And in this same example, I just wanted to point out how we can identify the overall market direction as being up as long as our MACD lines are above zero. Whereas your standard MACD maybe was in and out, multiple times, and you can use these indicators together, which we'll be talking about when we get into strategies. But the whole point here is just identifying market direction, because the HopperDirectX indicator is made up of two MACDs. It is basically just a supercharged MACD, and so anything above zero, we are in the up direction. Anything below zero, we're in the down direction, and crossing zero, crossing that polarity line gives us our timing for expectations about momentum building and momentum fading and so on. All right, so the next slide is just an example of blocking one side or the other. So in this example, as soon as the market cleared the range filter from the previous choppy kind of range activity, and it started producing a down signal, which was stopped because the market was continuing to be choppy. But rather than continuing to give you buy and sell signals above and below zero, it was blocking the buy, and it blocked another buy here, and it kept hitting us up for the down, 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 down direction, giving us a preference for, ultimately was the correct direction for this particular market. And so in this example, I'm just introducing you to some of the things that this tool can do, and I want to pay attention to it when I get multiple downs, or multiple ups, and it's really blocking the opposite side, and it's giving me the impression that this market is still set. It's still an environment where expectation for direction is in the down direction, and we're blocking the other side. And that kind of sets me up for the types of things that I might be looking to do in the market. And then in this slide, this is the warning for range behavior. When you're looking back through the history of your charts and you see a period of time, a few days here, where the market's going sideways, it's really easy to look back on it and say, oh yeah, that was just a range, and of course nobody would want to trade that. But in the moment, it's very difficult to to feel like you can be certain that it's an avoidable range. And there might have been some little bits of short-term trade activity and opportunity in there. But for the most part, this is in one day an awful lot of range detected, up and down, and a couple of more down, and then there was a range detected going up, another range detected going up. So 3 going down, 2 going up. I mean, it's really giving me the feeling that I'm very pleased with myself if I avoid trading during that type of market environment. So it's just one more thing that's just going to alert you to the fact that that this particular market is not configuring mathematically the kind of environment where we can expect continuation. Now you compare that to just at any point in time getting a normal hopper during the active part of the business day, and we might have thought price is making a move away from the moving averages, and we're getting a hopper, and those are very tempting to get into, and in fact one of them was okay. But for the most part, this is a very choppy, undecided market, and if I can see that and avoid taking trades on this particular symbol on this particular week, then I've done a good job of really limiting my risk. And so the other thing I wanted to point out here was that this is the HopperDirectX indicator, and remember the MACD line and the signal line on the new indicator, it's really 2 MACDs. Both of them are MACDs, and so the faster MACD is making it over 0. And the slower MACD is not, and so that's really interesting how they kind of check each other, right? It has to be strong enough that both can get into position, and it has to be long-lasting enough that by the time the slower one gets there, the faster one hasn't turned back. So if the faster one does turn back, it's going to be blocking a lot of otherwise what would it look like signals. But in hindsight, you can kind of see how the HopperDirectX MACDs were just really hovering really tight and really close to that 0 level, and that is a level where momentum starts from. It's where direction starts from. So when you see the indicator totally flat to that line, it's waiting. It's waiting for the market to make a decision and for something to happen. It doesn't mean that this indicator has gone to sleep and there's nothing happening. It doesn't mean that it's neutral. I mean, I guess that's one way of identifying it, but in my mind, this is loaded, right? This is loaded with potential because eventually the market's going to pick a direction and go. So in this slide, I just wanted to, introduce to you what this indicator can do, and one thing that it can do is really give you this battery of labels that says hold on, range detected, danger, danger, and you're not going to miss that. And remember to remind yourself to really be patient for a better market environment for trading. And here's another example of the same thing, but in a wider range situation. So this was a 30-minute chart with the very rangy, wide swinging Great British Pound US dollar currency pairing, and we get range detected going down and it stops us, range detected going up and it stops us. We get range detected, and we also get a down signal pretty close to each other, so it must have cleared the range filter, just temporarily, and then it exits out of that immediately. Range detected, range detected. I mean, you look at all of this on a 30-minute time frame chart with, with a market that's not just flatline. It's not just a sideways. The moving averages aren't giving it away. And so now, I'm not saying there's nothing to trade here. There is certainly things that we could talk about in terms of strategy, what we can do. And again, looking at a chart in hindsight, it looks very obvious. Oh yeah, I can tell that's obviously this very choppy range pattern. But in the moment, when you're right here, you might just be like, whoa, I don't want to miss out on this really strong move. And, maybe it was going to continue, but maybe it was going to rapidly reverse on us. And so very often that's exactly what it does do. Now we can actually work with that information, which I'll talk about when we get to the longer time frame charts. But in this series, it's just to sort of introduce to you some ideas about what this indicator can do and what the messages from this indicator are going to mean for you. So just kind of a quick review on short-term charting, and I consider that the 5-minute, the 15-minute, and the 30-minute. Those are my favorites right now for short-term charting, for looking for analysis and planning trades, particularly during the active part of the day. On the short time frames, timing is everything. Well, I mean, it is with everything, but on the short time frame charts and on short time frame trading, the time of day is everything. So patterns are relevant, but only really during the active session. So you want to look for signals from this indicator or any indicator on your 5-minute charts, really only during the active trading part of the day. So across the majors, the European session and the US session are the best. The Asian session can offer some good opportunities too, but we have some caveats around that one. The next point is that the market is actually in a range most of the time. The great majority of price action is range behavior, so it's really good to have some good solid range trading strategies. But on the short time frame charts, you're going to be able to find trend activity, patterns that demonstrate trend activity on the short time frame charts, because they can clear sort of a short little segment of trend activity within the range pattern on the higher view. So even when the market is generally working a range over the course of the week, the indicator is designed to look for trend activity, and it will help you find and pinpoint those timing for those moves, even on the short time frame charts, provided that you're paying attention to it during the active session. So it's timing is everything, but timing for direction and momentum is a very valuable thing to get from an indicator, especially on the fast-moving short time frame charts. Okay, so now we'll have a quick look at introducing some of the same ideas and what that would look like on the longer term charts, and how it can be useful to you on the longer term charts. Again, point of entry for not just trend trades, but trend and range trades. Anticipate duration as you watch for the end of momentum. I'll show you a little bit about that. Identification of no direction. So this is new, and it doesn't actually have a label yet. Maybe in the next phase it will have a label that pops up. But I can show you how to identify when it's not showing you direction at all. And it's really important to identify that and wait for the market to show us what it's going to do next. And again, just warning signs when you're trading, and it helps give you information about timing, momentum, direction, when it blocks one side and when it detects range, a range mark, when it hits the range filter. Okay, so just a few quick pictures to show you what some of that looks like. So points of entry for range trades. We'll talk about that one first. Basically, when it's on, this is a 4-hour time frame chart, and when you get the range detected signal, what that means is that it's the HopperDirectX has made a hopper, but it ran into the range filter. It's got a range filter built into it, and if the range filter blocks that signal, it'll give you this this message here. So essentially, it did find a signal to go long, but it blocked it and instead told us that range was detected. And so that doesn't necessarily mean immediately trade against the direction of that market. But what I have noticed is that it's an excellent heads up for what is the market going to look like when the next reverse trigger finger signal happens. If you're new to my work, you can review the glossary or my other teaching videos about the hopper strategies and some of the names of these techniques for trading. But the reverse trigger finger is when on the standard MACD, the MACD line crosses the signal line going towards 0. It's the counter trend signal from the MACD, and when we get that signal following the range detected label. So range detected, wait for it. When does that next reverse trigger finger happen, and what does it look like? Is there a big space back down to the home base? Is there a big space between the MACD reverse trigger finger signal and the 0 level? Does it look like it's giving us a setup? Because not every every label is going to be happening where it's a good pattern. For example, we got the same idea here, and by the time we got the reverse trigger finger, there was really no space, and price is just too close to the moving averages to make it worthwhile. But in the instance where we get the heads up, and then the very next reverse trigger finger, we've got all this stretch. We've got an idea that this particular reverse trigger finger is a pretty good signal for capturing the sweep back towards the moving averages. And here it happened again in the opposite direction. So. And again, what's happening is the DirectX, it's 2 hoppers. 2 MACDs are making the hopper, and instead of giving us the sell signal, it ran into a range filter because it's mathematically detecting range behavior in the market still. So instead of giving us a down signal, it gives us that range detected label. And what does that tell me on the higher time frame charts? It tells me to be watching for the next reverse trigger finger, and that might be something that helps us identify a good opportunity is coming in the near future. So if you use the button, you can set the button and it will watch for the next reverse trigger finger for you. Or if you are taking all your trades without any automation, you can just put yourself on notice about when to start planning for that next counter trend signal from the MACD. Okay, so the next one is looking for points of entry for trend trades. And again, when it makes a hopper, it's making a hopper with 2 MACDs over 0, and it's pinpointing timing and an identification that the market that change is happening, that there's a good setup, the range filter is not in the way, and everything's in the right order for the market to roll out a new wave of momentum. So when we get the signal, this is not a fortune teller. There's no way to know when sometimes it'll be that much trend activity or when it might be that much trend activity, but it is a signal nevertheless, and it gives us a really good amount of detail for identifying timing and an expectation that we have a good setup and we have a good opportunity. If there's going to be some trend behavior, everything's in order for that. And then as it carries out, you can, and again, when we start in the next series, we'll talk more about strategy. Lots of different ways that we can pinpoint picking up the first wave of that momentum with help from just the standard MACD, or holding those trend trades all the way until we get the X, which if it ends up being a long-lasting trend, those can be huge, which is why we've built the automated trend trader program. But for the most part, you only get those big, long-lasting trends a couple of times a year at best. So for your everyday trading, it's really those points of entry and helping you with your using that into your strategy as you're looking for opportunities to trade. So here's another example. This one is how you can anticipate duration as you watch for the end of momentum. So when does momentum end? It ends, well, I mean, In a standard MACD, it ends as soon as the MACD crosses 0, which is true in the HopperDirectX too. But we get the X as soon as the faster MACD crosses the slower one. And then if it revs back up again, it'll give us another signal to go long, and we'll keep trying to work it until one or both lines are below 0, and then it will stop finding that signal. But so you can really see that it holds those two MACDs, and the combination of them together is really awesome, because we have a faster moving MACD that's really going to sense change fast and in the moment, and as soon as change happens, it's reacting very quickly. And then we have a slower MACD that's going to take longer to get moving in any direction. And so in order for them both to make it up over 0, it has to be a strong enough environment, a strong enough signal. And then again, in order for it to show any kind of duration, I want to see that that faster MACD really building away from the slower one. And as they start to come together, you can start to sense that we're coming to the end of that wave of momentum, and eventually they will cross and we'll get the X on the chart. So so if you're in a trend and there's a great deal of space between the two, you can have this this indication that there's I'm anticipating we still have some duration here. Whereas when they start to come together, I start to think maybe we're running out of steam here. So I can kind of see that coming, and I would kind of want to determine this wouldn't be the best place to try to jump in on the on the whole run, or if you showed up here, you might be able to say, wow, this thing is just getting started and I can still grab it. That sort of thing. So it gives you an ability to anticipate duration, and we can kind of see how long it's been in this pattern, and does it look like it's really still building, or does it look like it's on its way down from that big that big wave of momentum is just sort of fading down to towards a flat line. All right, and then in this slide, I wanted to show you how you can identify when there is no direction in the market, and I don't have a label for this one yet in the indicator, but so you'll just have to know to watch for it or to recognize it. But basically, when one signal ends, and we got the X, so we had an up signal here, which was canceled here, and then there was nothing, no down, no up, no range detected, no nothing until here. So that's really important, because that is really the truest period of time where you can sense that there is no direction in the market. So if you were thinking, for example, to sell here because price is below both lines and maybe MACD is below 0, you get this you get this information that the HopperDirectX is not calling it anything. It's not calling it up. It's not calling it down. And in fact, the next time it made a call, it was back to the up direction. So it really would have saved you from slipping into a trade in an environment that may look decided, because by our standards, if price is moving below both moving averages, and especially if MACD is below 0, it was in a good position for having an expectation that it may swing down for a little while. And in fact, it really was a very undecided, very choppy market that was going nowhere. And so it's a really cool, very subtle way of identifying, hey, we're not up, we're not down. We're not even saying range. We're saying we absolutely have no idea. That is something that you don't want to miss when you're planning to trades or when you're trading. In order to make your dreams come true as a trader, if you're dreaming of being a successful trader, and if you've been trading for any length of time, you're gonna tell me I'm right about this. It's not because you can't find trades that you don't succeed. It's because if we could just eliminate the bad ones, right? So this is something that's going to help you trade less, not more. It's not a matter of needing more trade opportunities. There's tons of them in Forex every single week. But the fact of the matter is we do not need to trade every day. And the better a job we do at filtering our trading, really the more successful in the end we will be. And that is just a true statement. All right, so just a quick review on the long-term charting, kind of what this indicator can do for you. And what I consider long-term and what I use myself is the 4-hour time frame chart and the 1-day chart. Those are the only two I use for long-term charting. and planning trades. So patterns can last for weeks or months on your long time frame charts. Absolutely weeks or months, whereas the short time frame chart, hours to days, right? So, but we can identify tradable spaces within those patterns, even if we're not inclined to hold our trades for weeks and months. To be honest with you, in Forex right now, I would not recommend holding trades open for weeks and months. It's just the world is too volatile right now. There's too many weird things going on. Too much disagreement, too many uncertain factors. So I really would recommend that you take pieces of those tradable spaces within those big long patterns that we can find on the longer time frame charts. Right. But what we don't have on the long-term charts is a whole lot of help or a whole lot of idea about momentum and expectation about when the moves are going to happen. We just get these great patterns and these great spaces. But if you were going to pinpoint momentum, when's it building, when's it fading, you would need some help from some of your indicators. And the HopperDirectX is just another one that's going to help with that. HopperDirectX is an indicator that's, again, looking for trend activity. But when it does detect a range environment, it blocks the trend signal, and then you have a reason to be cautious on your trend trades, but you can also get ready for any range trade planning that you might be able to participate with. MACDs need time to recover in between their waves of momentum, and the HopperDirectX is exactly the same. You can see when something is starting or when something is ending just by the shape of the MACDs in that indicator. It's hard, It's really hard because I really believe that to improve your trading, you're going to do it with less trades. It's not what you can do to get more trades. It's not looking for tools to help you find more trades, because that's not the problem. It's what we can do to find just fewer trades. So we're taking fewer of the bad ones, and we're happy enough with just one good one. And the question is, how will you stop yourself? Yeah, temptation. It's hard. I know. Hopefully, in this website, in this community that we are building, we have trades, we have programs, and we have community where we can work together and help each other do a better job with doing just that. Thanks for being here in my webinar video, and I will see you next time. Bye.